Hi YouTube, Regina here from Simply Fundamental. Today I want to talk to you about Social Security and income taxes. I know this is a topic that is on many people's mind. There is a proposal out there that is looking to eliminate federal income taxes on Social Security benefits completely. And this has a lot of people wondering who would actually benefit. As it stands today, there's quite a number of people who do not pay taxes on Social Security benefits. But as more and more time goes by, that will change. So I don't know what's going to happen with Social Security and whether or not it will become tax exempt from federal income taxes. But to determine who's really going to benefit, you have to look at, will you have to pay income taxes on your Social Security in retirement? As of today, approximately 2 out of every 5 Social Security recipient will have to pay federal income taxes on at least a portion of their Social Security benefit. And this happens because they have other income in addition to their Social Security payments. The IRS uses what is called a combined income formula to determine whether or not a portion of someone's Social Security benefit should be subject to taxation. This combined income formula looks at your gross adjusted income plus, not including your Social Security payment, your gross adjusted income plus non-taxable interest plus half of your Social Security payment, and that equals your combined income. Now, they're going to take that number and they're going to determine if you have to pay federal taxes on a portion of your Social Security. Now, what is the adjusted gross income? What is that number? That is your gross income for the year minus any adjustments that you can make. So, for instance, this would be your salary or your wages, your tips, your bank interest, your dividends and capital gains, and let me think what else. Any rental income you have, any self-employed business income that you have, pension plans, alimony, lottery winnings, unemployment payments, and then there is taxable distributions on retirement plans. So that's your gross income. What are your adjustments? Adjustments are things that reduce your tax liability, that you should be paying taxes on them for the year. So for instance, if you contribute to a tax deferred retirement plan, that would be an adjustment. If you paid alimony, that would be an adjustment. If you had student loan interest, that would be an adjustment. Adjustments are not the same thing as the standard deduction or deductions that you make on your taxes. I think I also missed the rental income would be income as well. That would be added into gross income. And then whatever your adjusted gross income is, you add non-taxable interest in. Now, generally, you do not pay taxes or federal taxes on non-taxable interest. But the IRS uses this in their formula. So if you have municipal bonds that are paying you interest, that gets added in. And then half of your Social Security payment as well. So whatever your combined income number is, it's going to determine, depending on how you file, whether or not your Social Security benefit should be taxed at all, none, up to 50%, or up to 85%. No one has their Social Security taxed more than 85%. But what are these numbers? If you file as an individual, up to $25,000, you will fall in the no tax. Between 25,000 to 34,000, up to 50% of your benefit may be taxed. And then if you make more than $34,000 as an individual, up to 85% of your benefit may be taxed. And the up to portion of your benefit that's going to be subject to tax is done on a worksheet. So the IRS has publication 915 that has a worksheet within, and that will determine how much of your Social Security benefit will be taxed. If you are filing a joint return, the numbers are slightly different. And so up to 32,000 of your combined income number, if it's up to 32,000 or less, then no tax. Between 32,000 and 44,000, then up to 50% of your Social Security benefit may be taxed. And then lastly, more than 44,000, up to 85% of your benefit may be taxed. Now, I cannot tell you how much your Social Security benefit is going to actually be taxed, but if 85% of your Social Security ends up being taxed, it's going to depend on your marginal tax rate. Now, your Social Security benefit, again, is adjusted for inflation each year. This combined income formula is not. So the up to 25,000 as an individual that is not taxed, that has not changed. So as you can imagine, when you are determining whether or not your Social Security benefit is going to be taxed, more time goes by, your Social Security payments are going to go up, and the cost of living is going to go up. And so you may need to go earn additional income. Or if you are getting older and you have saved money in a retirement plan, you're going to reach required mandatory distributions. And you're going to have to take money from your retirement account. So now let's go through some numbers. If you are earning the average Social Security payment in 2025, that means you're earning approximately $2,000 a month. That's $24,000 a year. As an individual, they only look at half your payment. But if you collected Social Security before full retirement age, then what will happen is you're allowed to make additional income before your Social Security benefit is reduced. The IRS actually allows you to earn $23,400 a year. Now this number is slightly different if it is the year that you first retire and collect Social Security. So for instance, if you worked half the year and you made money, the months in which you worked there, it wouldn't be included. They would do it on a monthly scale. So if you retire mid-year, then the month of your retirement, the maximum that you could earn would be $1,950 a month before your Social Security benefit would be reduced. So imagine you're collecting Social Security, you have income that first year. You could easily go up above that 25,000 mark. Now, if you're married filing jointly and you both get the average benefit, you're automatically at $24,000 a year, just considering the Social Security benefit. Again, the formula, the combined income formula is your adjusted gross income plus non-taxable interest plus half your Social Security payment. So married filing jointly, both earning $24,000 a year, that means only really one payment applies. So $24,000. Now, to get above a port, to not be taxed as a joint filer, your Social Security would have to be $32,000 or less. 24 to 32 is not that far. That's $8,000. Can you imagine living on $24,000 a year? You're going to have additional income. including potentially the additional $23,400 that the IRS allows each of these spouses to earn. And so therefore, you could easily have your Social Security subject to taxation. So that is why more and more people are really, really becoming concerned with the idea of, or excited about the idea that Social Security taxes on Social Security may go away entirely. Now, in addition to federal taxing income, there are 9 states that still tax Social Security to varying degrees. And they also use adjusted gross income for the most part, except one state, Montana, which follows what the federal rate does. Now, what are these 9 states? There are 9 states that at least partially taxes Social Security. So you'll also have to pay state income tax if you live in any one of these states. And those states are Colorado, Connecticut, Minnesota, Montana, New Mexico, Rhode Island, Utah, Vermont, and West Virginia. Nebraska, Kansas, and Missouri used to tax Social Security, but those were phased out, I believe, in 2024. They eliminated taxes on Social Security retiree benefits in 2024. West Virginia is phasing out its tax on Social Security, and it will be 100% phased out by tax year 2026. But as far as the other states that do tax, they look at it, and every state will be different, but they tend to look at your adjusted gross income to determine whether or not a portion of your Social Security would be subject to taxation. Montana follows the federal level. So Social Security benefits are taxed as they are at the federal level. So if you live in Montana and you earn under, and you're married filing jointly, and you earn under $32,000 a year as your combined income number, according to the IRS, then you would not be taxed at the federal level on your Social Security benefits. However, anything more than 32,000, I think I might have just said 34 in that second. Anything more than 32,000, then Montana is going to tax you as well, and your Social Security benefit would be subject to up to 50% of your benefit being taxed. Now, the IRS has a worksheet that you could use. It is IRS Publication 915, and in this worksheet, it will determine how much of your Social Security payment will exactly be taxed. So this up to number will change also year to year. But again, this combined income formula is not indexed for inflation. So as more and more people see Social Security adjustments, or their Social Security has adjusted for inflation, then it could be that they're going to be taxed. So that is why people are truly excited about getting rid of Social Security taxes, or having federal taxes not be on Social Security benefits. More and more people have not planned well for retirement. And so more and more people have to work at least part-time or until full-time retirement, and even well into retirement. And so they have no choice because they're not able to survive on Social Security alone. And so, yeah, typically what happens is those who have not saved for retirement are the ones who are forced to go back and work into retirement. And then therefore, they actually go above these thresholds. And so that is why people are excited, and lawmakers are excited to even propose the idea that to eliminate Social Security taxes on Social Security in retirement. I hope that helps. And I have to say this, I am not a tax professional. I am a financial novice, or I have such a love for finance. But that doesn't make me a professional. I do not make scripts for these videos. So please review the IRS publication 915 and review that worksheet to determine whether or not you are going to have to pay taxes on your Social Security. Year to year, it will change, and particularly if you do have other income in retirement. Thanks for tuning in, and I will catch you on the next one. Oh, and hit like and subscribe and share. I think I'm supposed to say share, and I'll catch you on the next one. Bye.